Hey everyone, and thanks for jumping back into the cryptoverse. This is a collaboration series that should have started a long time ago. This is with me and Gareth Soloway. I'm sure everyone here knows who Gareth Soloway is. He's been pretty vocal about his views on the cryptocurrency markets for quite some time. He's got a lot of experience dealing with markets. Gareth, if you could just provide a very brief introduction for the 5 people living under a rock for the last couple of years if they don't know who you are.
Yeah, so first of all, this is amazing. I mean, when Ben had the idea to do this collaboration, I said, holy cow, this is a genius idea. It's great because it brings together two very logical, technical, data-driven minds that really look at things in a different way. I look at much more shorter term charts. You look at much more key data points and history of things, I believe at least. And so for those of you that don't know me, I'm Gareth Soloway. My website is verifiedinvesting.com. I trade crypto, I trade stocks, I trade commodities. Basically, I'm a chartist. So everything to me is all probabilities. And therefore, it doesn't mean I'm right every time. In fact, I guarantee I won't be right every time. But it's about being right most of the time, right? It's instead of just following the hype like so many people do on crypto Twitter. So that's just a rundown of me. Ben, I feel like you need to give a little rundown for you as well, because a lot of people that are tuning in are probably know me, and maybe a couple haven't heard of you.
Yeah, so my background is mostly like science and engineering, undergrad in math, PhD in nuclear engineering, postdoc, national lab, that sort of stuff. No finance background, really at all. It was just sort of trying to mine the data to understand what was going on in the markets, and been doing that ever since 2019. So I don't have the same real world experience, I believe, that Garrett has, because he's lived these markets for much longer than I have. And so it's going to be great, I think, to have someone who can say, hey, there are the charts, and I think everything is in the charts, but we also have someone here who can say, look, I lived through the dot-com crash, and it's not, how things played out back then. So that's just my background. I don't really tend to focus a ton on traditional technical analysis, although I do dabble in it a little bit. I look at more things like risk levels and Bitcoin pairs, managing risk that way, as opposed to more traditional ways. So that's generally my background, and I'm excited to contribute as best I can.
Yeah, and I think we came up with the no shill zone. The idea being is that because we're so data driven, it should be something that is very logical. Like, you go on crypto Twitter, you go anywhere out there, crypto is filled with emotion, right? And to the detriment of people, right? I mean, people go long at highs and go short or sell at lows. And I think the idea of the no shill zone is to really give you guys the facts. What are the charts saying? What are the probabilities saying? What's the data saying? So very cool to be here, Ben, and awesome. Yeah, that's all I can say.
Yeah, I know. We actually I met you for the first time at Bitcoin Miami. It's the second conference I've ever been to in crypto. So it was great to meet people, and I'm excited for us to get this started. Well, without further ado, why don't we just go ahead and jump in, because there is no shortage of things to talk about right now, with the markets as crazy as they are. Gareth, I think it would probably be the most prudent for you to start off here and just provide your general overview of the market so people kind of understand where you're coming from.
Yeah, absolutely. So I think specifically right now, and I do want to be clear that we'll be covering commodities, stocks, and everything. But right now, crypto is what's in the news. Later in the stream, I think we'll get into a little bit more about the Federal Reserve coming up this week, the CPI, PPI data, and what that could imply for the all risk asset markets. But right now, it's altcoin collapse. I think you and I both remember about a month or two ago when Bitcoin was knocking on that 30,000 door, everyone was saying, get ready, load the boat for the alt season move here. This is going to be it, remember? And we know that did not occur. And one of the things that I brought forward, which is a very logical way of thinking, is I love to use this kind of example, which is if you just take a market with 10 people in it, right? And at first there's no one long a stock or a crypto, but slowly people start buying, right? So when you get to the point where everyone's saying the altcoin season is going to happen, get long, essentially everyone that is long is going to have gotten long. So let's say all 10 people are long. If prices haven't moved up at that point, logic dictates that there's no one else to buy, and all it takes in the market is one or two negatives, one or two sellers, and people start panicking and then start dumping. And so I think anytime in the future where you hear like, oh, this is going to happen, and by the way, this is getting into the halving of it too, and I'm a skeptic that this next halving is going to have the impact that the last ones have, because that's all I hear now. Oh, don't worry, the altcoin, like, don't worry, the halving is coming up, just be ready for that. And right away, I'm like, that makes me nervous, because then everyone is getting long for that halving process. And it means that, again, who left is to buy. I think regulation, I don't know, Ben, how you feel, but without regulation framework, I think crypto's in a heap of trouble for a period until we get that regulation.
Well, especially the altcoin market, right? The altcoin market faces risks that Bitcoin does not. Now, Bitcoin still, of course, does face significant risks in the coming months as the economy slows down. But Gareth, one of the things you mentioned, and this is something I follow quite frequently, is the dominance of Bitcoin. One of the main narratives that was being used to support alt season going into the summer was that the Bitcoin dominance was at the range high, right? Oh, it's at 49%, therefore it's going to come back down. Where I think people get where markets can get often misunderstood is that if you knock on the door of that range high enough, it will eventually break, and it breaks to the detriment of the altcoin market. And what's interesting is Bitcoin, of course, is not at a new low, not right now, but there's a lot of altcoins that have already put in new lows.
Yeah.
Go ahead and share your screen and maybe walk us through.
I just wanted to show that Bitcoin dominance chart because I think it's such an important chart, how you've been knocking on this 49% level over and over again. And then look at what's happening right here. And one of the things you're mentioning is dead on, is number one, charting as a chartist, which is what I do, is that it tells you the more you knock on a door, the more likely eventually you break through. And so in this case, this door was a firm door stretching back to really 2021, right? And again, I'm big on analogies and examples. Think about this, folks. When you go up to a door, let's say it's locked. Let's say your cat's in there, your house is on fire. You really have to get through that door. You're going to run against it, bam, into it, right? Chances are it's not going to break the first time. You do it again, it might start to crack. You do it again, it cracks a little bit more. By the fourth or fifth hit, that door is going to give way. Think about charts and resistance levels the same way, where you're running against the door. You're running against the door over and over again. Finally, it cracks and breaks to the upside. So I think that gives you that idea. And I think also, in Ben, you correct me if I'm wrong, but I think people have to remember that the Bitcoin dominance is a shorter term trend, meaning that if you go back further, I mean, it was way, way higher just before that 2021 bull market.
Yeah. I mean, we essentially were at like 72% in January of 2021, in fact. That was when the Ethereum Bitcoin valuation was at like 0.02. No one remembers this because everyone joined back in March and April, but the dominance fell off a cliff back then. One interesting thing, Gareth, since you have the chart pulled up, would you mind overlaying Bitcoin USD on this chart? Because the thing that I keep going back to is when you look at the when Bitcoin dominance breaks the range high in both 2018 and 2019, it marked the top of the rally for Bitcoin. Like it meant the yearly high, or it meant the local high was in. So like go back to if you look at 2018, you would see that. Yeah, like once the dominance, it's kind of hard to zoom in because I think it's because you have it on a percentage at the bottom right hand corner.
I'm going to give you the screen back because I think you'll know exactly what you want to show here.
Yeah. Let me just show what I'm talking about because this is something that I think is important. The dominance. So the dominance right now is at 49.2, but if you overlay Bitcoin USD onto this chart, and this is what I've really I've hammered and told for a long time, is that let me clean this up a little bit so there's not so much going on. Once the dominance here, once we broke that like 50% level from the prior rally of the dominance, if we draw a line down from that point, that marks the top for that Bitcoin rally in 2018. And that was where altcoins got wrecked. And they got wrecked on when Bitcoin went up and when Bitcoin went down, right? Altcoins lost value to Bitcoin on Bitcoin's rally. They lost even more when Bitcoin came back down. And then the same thing happened in 2019 as well, right? We had this range high on the dominance, and it wasn't until it broke, and once it broke, it meant the high was more or less in for Bitcoin, and then we can see that it faded for the next 8 to 9 months. And of course, a lot of altcoins went on to put in new lows. So I think that there's a lot of reason to be very skeptical of the altcoin market whenever the dominance breaks, because normally once the dominance range high breaks,
Yes.
It runs for several months.
Right. What you're saying is essentially it's not like it just breaks and then comes back down where the alts regain. In general,
Right.
it's the beginning of a bigger move in Bitcoin dominance that's just starting, which in charting, that's exactly what it is, right? When you hammer on a level over and over again and finally break out, it's not like a breakout of this magnitude. It's usually a much bigger move that's just beginning. And I think that's really important. And I think what you're also saying is that, at some point, I do expect crack and come down, and in general that's not going to be good for the alts, because if you have people getting scared even at the top, the best, I mean, Bitcoin, again, if there's one that's going to survive that's not going to be regulated by the SEC, it's Bitcoin. If that breaks and starts to collapse down, let's say it even gets back to 20,000, very, very hard for money to feel comfortable to go into the even riskier assets like the Cardanos and the Solanas and those other ones as well.
And a lot of those are putting in new lows now. I mean, ADA just put in a new low, right? Avalanche just put in a new low.
Yeah.
Chainlink just put in a new low. Polkadot just put in a new low, right? I mean, what it shows you is that the buy the dip mentality on the altcoin market, it does not work for long periods of time. Like it just simply does not work. And a lot of people justify it by saying, well, eventually the altcoin market will recover. There is a chance the altcoin market recovers, but it might not be that altcoin, right? It could be a new class of altcoins, and that's what history would ultimately dictate. Gareth, one thing that I think it would be really useful for people is if we could maybe talk a little bit about the .com crash and some of the similarities with that and today. All I can do is look at a chart and see that, in the .com crash, the NASDAQ dropped 77%. It then had a bounce and still put in a new low.
Yeah.
I look at it today, Bitcoin dropped 77%. It bounced. A lot, and we're seeing the same thing with like the total market cap. Can you kind of explain what you experienced back then and what are some of the similarities you're seeing in crypto today?
Yeah, absolutely. So a couple things in terms of real world, like being in it. So the same things in terms of what happened in 2021 and even what happened over the last few months with the meme coin, shitcoin kind of situation where you had these people that were they were bringing to market anything. I mean, it could have been like, hey, we drop ship widgets. It like literally meant nothing, but they would name their company widget.com, right? Pets.com, like all these .coms, and instantaneously they would shoot up hundreds of percentage. They would 10x, 15x, 20x. You'd have these pump and dump schemes, which again, unfortunately, crypto Twitter and some of these other things, that's happened as well, where you had these people that would go on these message boards. Back then, by the way, the internet was in its infancy, but you still had these like Yahoo message boards where people would go on and pump and say, oh, this is going to be the next greatest thing. It was kind of the influencer type group of the early ages of the internet. And so you had the same mentality coming into it, which again, if you notice in these crazy periods and other assets, you'll have the same sort of thing. People repeat, right? Leopards don't change their stripes, as they say. And so you have the same sort of impact, the same sort of bad behavior, if you will, that goes on. And by the way, you could go back to the 1980s with you look at the Jordan Belforts and stuff like that, with the pumping of the penny stocks and stuff like that. I mean, it happens every so often because greed and fear never change. So right. The greed of people will make them want to believe that whatever it is, even if they know deep down it has no value, they still believe that they can 10x their money and then sell it to someone else at a higher level. And that in and of itself was what raised flags for me, is just being like, holy cow, I'm having like PTSD flashback from the 1999, 2000 level. This is exactly what people were doing, and look at how it came out. And so I think for me, that was like the real recognition of something's wrong here. When you have things that are being shilled that do not have any intrinsic value or use case even, that's a warning sign. So again, the data you're talking about, I think, is really important, Ben, as well as looking at the actual data as well.
My content or my moderation skills have not been, or my media skills are coming out here. When I shared my screen a moment ago, I was sharing my desktop and not the actual chart. So just for a second, I'm just going to pull the chart over the Zoom call just so people can see what I was talking about with the Bitcoin dominance.
Oh, I thought I saw it. Weird, I saw it.
You saw it, but I was sharing the wrong screen to YouTube.
Oh, okay, gotcha.
So yeah, so it just and I'll get back to what you said, but yeah, just so people can see, right, the Bitcoin dominance, when it broke the range high, it marked the high for Bitcoin for quite some time. No, but Gareth, I think you're right, and with regards to all this excess liquidity, one of the things that I think about is a lot of people have a hard time, I think, accepting that a bear market can last this long, right? They're just, it's people get labeled perma bears if you talk about, well, things can keep going down, but so far there's so many coins that just keep putting in new lows. So I guess we should maybe talk about what justifies continued bearish price action. Is it just the idea that people keep throwing all their money into these meme coin scams? You were in crypto in 2019.
Yeah.
In the first half of 2019, we saw the same thing happen. Everyone threw their money into meme coin scams, and then by the end of the year, all those went to zero. So is it that, or are you also looking a lot at the inverted yield curve and the Federal Reserve monetary policy? Does all that play a role?
Yeah, I think that's really important, right? Because 2019, you're right, you had a lot of this kind of going on. It was kind of like the precursor to the big one, if you will, which occurred in 2021 and all the way up into recent times. And I think the difference maker is that once we hit 2020, there was this flood of liquidity, right? You had so many situations where people were locked down, so they weren't driving, so they weren't spending money on gas, they weren't going out to eat, they weren't spending on money for food. The Fed, the government, the U.S. government was sending people checks if you made less than X amount of money, and so a lot of people were just sitting behind their computer, looking and seeing what was going on, and they have more and more money that they had in terms of liquidity. And we know the Fed was flooding the banking system with liquidity. And so it kind of created this almost tidal wave of, hey, I've got lots of money, I can't do anything with it, let me figure it out. Oh, this is like, it's almost a gambler's mentality. Oh, this looks like something I can do. And all of a sudden you hear about stories about Dogecoin and someone making $5 million on Dogecoin. And it's very much like the mentality of the lottery, right? Deep down, we know I play the lottery when it's like above $500 million, right? That's like my key thing. And deep down, I know I'm not going to win, but it's just fun. It's exciting. And so you get these people to kind of have this mentality of saying, hey, listen, if this person can do it, maybe I can win that lottery and 10x, 100x my money. And I think that lured a lot of people in. And then now the Fed, that's the bottom line. The Fed is sucking out all this liquidity. And that makes it very, very tricky for... It makes it tricky for scams to exist when you suck out liquidity, right? Think about Bernie Madoff, right? Bernie Madoff, as long as things were going great, he could pay off investors that wanted to pull out with more money that he was taking in. But as soon as we saw the 2008, 2009 collapse and people freaked out and he wasn't getting money in the door, that's when these scams are exposed. And I think that's so important for people to understand.
Yeah, I think that there's a lot of truth to the idea that exposes the higher interest rates and tighter monetary policy expose the zombie companies, right? They're not black swans. They're not a swan event, right? It's just the business cycle, and that's where we ultimately are. I do think while markets, of course, are facing a lot of headwinds, we should remind people that fundamentally, long-term, Bitcoin is bullish, long-term. Right, I think we would at least agree on that, right?
100% we agree on that, absolutely. And I even think there's a decent chance that Ethereum survives. I don't know, what type of form it's in, but it might be in this form, might be in something else. But I do believe that there's a use case for some of this stuff. So I think that longer term it is. But let's also remind ourselves that Amazon was, $100+ stock in 1999, 2000. And it collapsed to about $5. So it lost 95% of its value. And then if you had bought it, honestly, even if you had been in it from $100, you're looking back, it's worth thousands now, right? You still would have done amazingly well. So I do think, and I'm glad you brought that up. We talked about it before we started that, I don't want anyone being like, oh my goodness, this is the most bearish and horrible stream. Now I'm so depressed. Like there's always opportunity. It's just a matter of being realistic. And I think realism is not something that's common on the internet, and it needs to be.
Yeah, well, I mean, there's so many people that are just always bullish, right? And they always say buy the dip.
Right.
It's funny because so many bulls will dunk on bears anytime they go up 10%, but once they put in new lows, it's not cool for the bears to dunk back, right? It's not. It's like, oh well, people have lost money. It's not, but it's an interesting part of the cycle, and I think that it's relevant to say, hey guys, we've seen Bitcoin have secondary scares after so it's had a down year in 2014, it had a down year in 2018, it had a down year in 2022. Even in 2015, we didn't even have an inverted yield curve back then, and we still had a double bottom. You know, in 2019, we had a barely inverted yield curve, and of course, we had the stuff that happened with the pandemic, and it was a slightly higher low. We still have an inverted yield curve, more so than we've ever seen in Bitcoin's history, and we don't know what's on the other side of the uninversion. Normally, it's a recession, and
Yeah.
normally risk assets don't do well in that environment. But one of the things that you mentioned that I think we should talk about, because you mentioned a couple times now, is Ethereum, because a lot of altcoins are just struggling, right? They're struggling to catch a bid. When Bitcoin goes up, the altcoin market doesn't go up as much as Ethereum, or the altcoin market does not go up as much as Bitcoin or Ethereum. And when Bitcoin goes down, the altcoin market gets crushed even more than Bitcoin. But Ethereum has been doing better than the collective altcoin market, right? Like it's been doing better. So I'm curious as to what your thoughts are, I guess primarily on the Ethereum Bitcoin valuation.
Mm.
Because I think this is the most polarizing view, or there's so many people that have very different opinions on the Ethereum Bitcoin valuation right now, and I think it's probably causing one of the most polarizing um, takes. Like some people are very bullish, some people are very bearish, and I mean anyone can find evidence to support their view. But I'm curious as to what you think.
Yeah, so for me at least, specifically with Ethereum, I think the number one thing why it's held up a little bit better is probably I don't believe it was named as a security in that group of list that the SEC said. So I think that gives people confidence. And one of the things I like in Bitcoin too is like Bitcoin is like your digital gold, and Ethereum is kind of like your digital silver, right? And the reason I say digital silver is number one, it's usually more volatile. Silver is more volatile than gold, and also number two, you have this kind of industrial use case for silver, right? It's a store of safety, but it also is used in the economy. Well, Ethereum, you could argue kind of the same thing. People believe it's kind of a safety hedge, but they also need it. You use it for various transactions and different things as well, like that. So I think that's one of the keys for me is that you have digital gold and silver, and so expect it to be more volatile. But in looking at the chart, I just want to show my chart real quick on Ethereum, and then we'll get right into kind of what you were saying is that in terms of the Ethereum versus Bitcoin. But what we can see is look at this beautiful like parallel lines and how in terms of charting, and by the way, this is just more proof that you don't know why these things work out. I certainly don't, but there's some sort of subconscious in traders and investors and people's minds that tries to make sense out of chaos, right? So most of the people would look at this, oh, this is a wild chart, but look at how many parallels exist within this chart. Like the high, this is parallel to these points, which then are this parallel to these points, and vice versa all the way down here. And we can see that we did break down short term. So I do expect Ethereum to come in here towards this 1635 level. But now that then becomes the support level, the next level, right? You have the lowest point here going back to 2022 connected through these lows right through here. And that now becomes your technical support. So if we do sell off there as a technician, I would start saying, okay, if we're going to bounce, this is going to be the spot where we're going to get a bounce. Doesn't mean Ethereum's bottoming by any stretch, but that would just be a technical short-term level of support. Now, if we just quickly go to Ethereum, Bitcoin, let's take a look at that in terms of Bitcoin. A couple things, just, and again, this is just based on purely charting, and I'm just going to do this live as we take a look. But this would be something that I would be watching like a hawk, right? So there's a trend line here that you're hovering on. If this breaks, you then probably have downside into this level down here. And so that to me would be something that we would pay attention to. I don't know if you have, your thoughts on this, but I would love to actually hear your thoughts on this, Ben, in terms of what you're seeing.
Yeah, maybe I'll try to share my screen. I'm just trying to figure out if there's a better way to do this without, because when I share my screen, it then puts it on the other one. Hold on a second. I'm just gonna pull the chart over, so it's going to briefly cover our faces, but
That's fine.
it's fine. Um,
I'm sure people don't mind not seeing us for a minute.
Yeah, that's fine. Yeah, so my view on Ethereum is, and I've been very vocal about this, is that the Ethereum Bitcoin valuation collapse could mark the end of the altcoin reckoning, right? So the altcoin reckoning is the idea, right, that altcoins just go down on their Bitcoin pairs no matter the direction of Bitcoin USD, right? So you have Bitcoin that's down, 60% from its highs from a couple years ago, but the altcoin market is down against something that's down 60%, right? So the altcoin market is absolutely wrecked. But if you look last cycle at what the Ethereum Bitcoin valuation did, there's a lot of different parallels actually with the Ethereum Bitcoin distribution phase and what Bitcoin USD did back in last cycle. But if you look, and again, I guess you can't see my screen, can you? Because I'm
No, unfortunately not. But that's okay. It's more important that the audience.
Yeah, but if you look at the low in December of 2017 on the Ethereum Bitcoin chart, right? There was a low there.
Yep.
It came back to that low a year later. That exact same level. That low, the second low, marked the bottom for Bitcoin. It was the second low back down that marked the low. And what's interesting is it happened a year later. The low last time actually occurred in June of 2022. So we're about a year later now. And what's also interesting is that while Bitcoin bottomed on that secondary low, that did not mark the low for the Ethereum Bitcoin valuation because Bitcoin leads the bull market, right? Bitcoin leads the bull market, not the altcoin market.
Right.
And so the Ethereum Bitcoin valuation went down even when Bitcoin USD went back up. So I think there's a case to be made that the Ethereum valuation against Bitcoin could collapse going into the summer back down to that 0.04 or 0.05 level. And that could mark some opportunities in the altcoin market. But with that said, I still think that it might not mark the low for the Ethereum Bitcoin valuation, right?
Interesting.
Because it could still roll back over as you go later on in the year. And then the other thing about the Ethereum Bitcoin valuation that I think is really interesting, Gareth, is that when you look at it on, say, like a daily time frame, that you can see two clear distribution phases, right? The one in May of 2021, we had our first peak. The second peak was in August of 2021. The third peak was in December. And then the last one was sort of in April of 2022. That looks exactly like Bitcoin's distribution phase, right?
Yep.
Back from 2021. And then it came back down, it retraced, and then it went back up for a sort of like little 1-2 punch, back up to like 0.081 and then 0.086. And then ever since then, we've essentially just been putting in lower highs. So, there's part of me that feels conflicted because, there's one narrative of, well, Ethereum's deflationary now, right? It's proof of stake. It's going to be different. It doesn't have to go down. But then there's another part of me that says, well, if that narrative were true, why has it been putting in lower highs since the merge? And in reality, it's been putting in lower highs since December of 2021. And in the inconvenient truth for a lot of people is that it's been putting in lower highs since 2017. Now it's also been putting in higher lows since 2015. So I'm kind of the opinion that Ethereum's Bitcoin valuation will fall back into that 0.03 to 0.04 range, and then at that point, maybe we can make a bull case for it.
And that's what the chart, at least the charting technical lines, are telling me, is that we've now been hitting on this trend line of support over and over again, and generally that tells you you're close to a break point. So that concurs. Actually, that's amazing. Yeah. Now let me ask you a question. I'm just curious on your views. Is that we obviously saw what the SEC did last week to Binance. We then Coinbase. Obviously, the Binance situation is much, much more serious because of the allegations. But is this an all-out war to kind of blow up the altcoins by the government? I mean, should people that are let's say you're holding some Cardano right now? Do you hold it? Do you get rid of it? Do you look for a bounce and get rid of it? How do you handle that?
It's tough to say because, for the last 18 months, everyone always wants to know, well, should they sell their altcoins, right? And it's always hard because they only ask that question after the most recent dump. And if they do it, it can often mark a local bottom for 2 or 3 months, and then they YOLO back into that altcoin right at the next local high, only for them to get dumped on again. So that's a very difficult thing to play. One of the things I've said, though, is that, look, if you want exposure to crypto, right? Like if you can think of a bull case, okay, because there's always the other view, right? If you can think of a bull case, we know that Bitcoin leads, right? So you could get exposure to crypto via Bitcoin, and you're likely going to outperform that altcoin, right? So you could theoretically buy that altcoin later with Bitcoin if you want exposure to crypto, right? Because the Bitcoin valuations keep going down. So like imagine you buy Bitcoin and it round trips. Let's say it goes 28K, or let's say it's at 25K now. Let's say it goes down to 15K and then back up to 25K. The altcoin market during that time would probably not completely round trip, right? It would go down, it would go down even more than Bitcoin, and then not pump back up as much. And so that's how you could navigate that, and that would give you that would give you some exposure to crypto if you want. And that was what I said back in late 2022 and mid 2022. It's like, guys, Bitcoin will likely go back up eventually. And if you want exposure, that's one way you can get exposure.
But you weren't preparing for the alt season, Ben. What's going on?
See, the thing with the altcoin market too is that, you know, if you look at Total 3, right? Total 3, has been showing weakness for a long time, and it fell below its 20-week SMA back in like the first or second week of May, and in 2019 it also fell below its 20-week SMA 2.5 months before Bitcoin did. So when people were optimistic about Bitcoin, I'm like, guys, you know, there's a case to be made here that the altcoin market is telling you that there's not liquidity coming into the market. Now, Garrett, I have two questions for you because I'd like your input on this. Number one is on the Bitcoin dominance chart. My expectation is for a surge to 60%. But you're more of a technician, I think, than I am, and I know you don't trade the Bitcoin dominance chart. Like, it's just sort of there, and you know what's going on. It's not something that you can go trade. Like, it's not like you're going long on Bitcoin dominance, right?
Yeah.
But I'm curious, like, you know, just from a technical point of view, upon the breakout, because we can see that it has broken out, what would be a target? What would be a short-term target that we could see in the coming months, just based on the technical view?
So this is great because it does clear out kind of like all that stuff and just says, okay, what does the chart tell us? So just like we said, this was consolidating, kept on hitting resistance, finally in the process of breaking out right here on the Bitcoin dominance chart. Now, in all fairness, there's not a lot of resistance on the way up now. I mean, you're getting to a point where there's a big move coming in this Bitcoin dominance. And the first thing I see, and I'll put a trend line in, see all these kind of pivot points right in here, right across here, this low right in there. And you're right about that. Look at this. Look at how you kind of can draw a line right across here. And what's even more amazing in this, if you take the highs of Bitcoin dominance from 2017 and you connect it to the highest point in 2021, look at the convergence of those two trend lines. And this, again, I love how your data is confirmed by my data and it's vice versa, because it really, I think that's very powerful when you see a confluence of these type of things. And so I'm right around that 59-60% level in terms of Bitcoin dominance. Absolutely.
One interesting thing too, just keeping this chart up for a second, I've talked about this as well. There's often a seasonality associated with Bitcoin dominance. Like, if you were to draw a line at every September going back for years, the dominance turns around. Whatever direction it's going, it turns back around in September. So I could totally see, you know, a 2 to 3 month increase in the dominance to 60% by September, and then we could see it fade. Like, we could actually see it fade back down, you know, to, you know, back down maybe like 55% or something, right? No.
Would you think that Bitcoin dominance increasing has any sort of meaning that Bitcoin will go up, or it just won't go down as much as the altcoins?
So in the pre-halving years, so I'm kind of conflicted because there's evidence to suggest that we could compare this to the pre-halving year of 2019. There's also evidence to say it's more like 2018 as well. And that the reason it's taking longer is just because there's a lot more liquidity that needs to get sucked up than there was in 2018. But in general, my view is that in the pre-halving year, we spent about half the year going up and then half the year going down. And so by the way, that dominance rally that you see in 2018, that went from like 39% to like 60%. Half of that move was on a Bitcoin rally, and half of that move was on a Bitcoin dump. So I think we've probably already completed the Bitcoin rally component of the dominance move. I think we're now in the Bitcoin dump phase, and a lot of people have asked me, well, you know, when is Bitcoin going to go down with Bitcoin dominance going up? And I'm like, well, what's been happening since mid-April? You know, like,
yeah,
it's been going down. And honestly, you know, if people want to know if what happens if Bitcoin goes up, it likely is going to wreck the altcoin market even more, because because then altcoins are going to struggle to catch a bid until there's more clarity from coming out from the SEC, right? They're just going to struggle, and until we get later on into this cycle, I do remain skeptical of it, and I think too that by Bitcoin coming back down, it crushes the altcoin market even more.
Yeah.
And then and the other thing too, Gareth, is that every cycle, and I imagine this was true in .com as well, and I'd like your opinion, is that it has to go on long enough for people to actually think it's dead, not just to pretend like they think it's dead, right? Like not just to say, oh, now it's dead, now we're gonna go back up.
Yeah.
I feel like in late 2022, when so many people thought the altcoin market had bottomed, they only were pretending that they thought the altcoin market was dead. What about now that the SEC is breathing down the neck of all these altcoins, right? Then it actually becomes a reality. And I'll say this too, the crypto is dead narrative popped up this cycle on the same day that the dominance broke the range high. It's the exact same thing as last cycle. Everyone thinks I'm just a Bitcoin maxi and I don't ever ride the altcoin market. That couldn't be. I mean, I love riding the altcoin market because that is where real money can be made. But the real money is not made by buying every bear market rally all the way down. So that I think is the hard part for a lot of people to understand is just trying to sit back. I mean, in the .com crash, how hard would it have been to just sit back for 2.5 years and to watch the market bleed?
Oh, brutal, absolutely, and that's what the markets do to you, right? So one of the stories I take from 2017 with Bitcoin is, I tune into stocks. Especially back then in 2017, I was trading 99.9% stocks, commodities. So I had CNBC on in the background, and I used to always remember that in 2017 they had the ticker of Bitcoin at the bottom, monitoring price. They would talk about it on every show and bring it up. And then what happened was, as it came down in 2018, they eventually, it got to 10,000, to 9,000, 8,000, 7,000. They actually removed that ticker from the bottom because it was just, and they did not talk about it at all. And that was a signal to me, right? Once they were like, okay, no one wants to hear about this. This is not even a story anymore. We just want to pretend it doesn't exist. That's where I start to say, oh, okay, now people are fully kind of giving up on it. And you're right. Same thing in the .com bubble. It takes your wind out of your sails to the point where you say, this is too hard. It stretches you to your breaking point. And that's really where you're supposed to be buying. And we didn't see that in 2022. And again, I use crypto Twitter as one of my best research tools, in that when I post something, I monitor how many people disagree with me and how adamantly they disagree with me. And the more they disagree with me, the more I believe I'm going to be right, because again, that's how emotion and psychological charting and price action works. And so again, same thing now. We had gotten up to 30,000, 30,500. And I said, hey guys, in fact, let me show you guys this. I mean, this is just like one of the reasons you have to charts are amazing in this respect. But if you looked back at 2021 right here, and you looked at the midpoint of the cycle, and then you saw here, it made sense that this was going to be where the most resistance on the chart was going to be. If Bitcoin was going to fail its move, it was going to be on this pierce of 30,000. Now, not just 30 hitting and kissing, but it actually needed to pierce 30, because psychologically, when price pierces an even number, that just having that 3 in front, that 30,000 versus 29, it's going to trigger more people to go long, and it's going to stop out people that are short. And so essentially you get the biggest switches at these even numbers, and that's exactly what we saw here. And so once that occurred, then price could actually start to come down, because you got your max people long, and there were not really any people left that weren't long at that point. Same thing with altcoins and so forth. So that was the key resistance trigger. And again, to me, I don't know if you think, but I'm still not necessarily in the camp that Bitcoin has made its cycle bottom yet. And again, I'd love to hear your view on that.
Well, yeah, I'll provide my opinion, but one thing about that chart is, I keep going back to this, is the seasonality. Like the peak in 2023, or at least the local top, there's always a chance, right? There's always a chance that it goes back up, but at least so far, it's the same day that it peaked in April of 2021, on April 14th. And it's basically at half the price, right? 64K to 31K, right? On the exact same day. And it also came after a January push, a February, March push, right? We all had those same local peaks. It's just 2 years later. and about at half the valuation. So that's an interesting perspective. I think, when it comes to, because everyone wants to know, right? Everyone wants to know if the bottom's in or not. Well, the first thing is, well, for what, right? Because a lot of altcoins are already putting in new lows. If you look at the 2019 year-to-date ROI for Bitcoin, it ended up the year positive. Ethereum ended up the year negative. Like it actually lost value in 2019 year-to-date, as measured from January 1st to the end of the year, showing you how much the rest of the market can get wrecked, even in a year where Bitcoin goes up in the pre-halving year. So my thinking on the low as to whether the low is in or not, I think, I mean, I'm leaning towards not, is what I'm leaning towards. But I would be willing to shift my view if we get an uninverted yield curve and we've gotten past this, like, do we get a recession or not, right? So if Bitcoin were to go back down to, say, like 18K or 17K or 19 or even 20K, right? There's reasons to think that we would get a scare. If it goes back down to that level, and we're looking and we've had a recession or a scare of one, and the inverted the yield curve is uninverted and we're starting to trend back up, then maybe I would start to shift my view, right? Like I think it's reasonable to have a view of this to say, hey, I think it's going to happen like this. I think we could put in a new low, but I think there's got to be a way for me to pivot that view if something else happens. Like what could happen, right?
If the let's say magically we get regulation and clarity,
right.
Big institutions, like, I mean, that's my case, right? Is that right now there's no one with big money is going near crypto because it's just way too uncertain. So if you did get clarity and it was like definitive clarity, then I do at least think with Bitcoin that you would see big money start to inch in a little bit.
Right. Well, and here's the take too. What if there's a scenario where the total market cap puts in a new low, but Bitcoin doesn't, because there's just been a rotation from money in altcoins to Bitcoin. Yeah. So that's a potential outcome that a lot of people might not expect as well. So I'm kind of like 60-40 is kind of where I am. Like I think 60% chance of a new low, 40% chance of not. But I don't really think it needs to be like I don't think we're going to go to $3,000, right? Like I don't think Bitcoin's going to go that low. It could take its prior low out by a couple $1,000s. I said the same thing back in the summer of 2022 when we went down to 17.5K, and I was like, look, we could go lower going into the end of the year, because every time we get a bear market year, everyone thinks that the summer's the bottom, right? Just like they did in 2018 as well. You get to the back half of the year, and then we actually get some type of move to the downside. One thing that and you've talked about this a number of times, is think about what got us out of the March 2020 drop, right? It was the Fed printing. But will they print with core CPI at 5.5? I don't I don't know. I don't think so, but
I hope not, just because if we went from 2% inflation to 9% with what they did, imagine where we go at 5% to where 15%. I mean, again, that's the tricky thing, and I think it's a good pivot over to here this week we have CPI data. I think, is CPI data tomorrow?
It's tomorrow.
And then we get the Fed on Wednesday with PPI data, I think. And I mean, number one, I would say, do you have a view on the Fed's decision? Do you think they'll surprise hike? Right now, Fed funds futures are saying no, they won't be hiking. But maybe if the CPI comes out hot, I mean, who knows?
It's possible. I mean, I tend to defer to the market because the market going into like 1 or 2 days before the meeting, typically the market gets it pretty right. I think on average, if you look back for long periods of time, I think there's a chance they pause and then they could raise again in July, right? Like that's a potential outcome. But I do think they are near the end, right? So like when it started, I said that I think the terminal rate is somewhere between 5 to 5.5%. And the reason I thought that was because normally they need to get interest rates above where CPI is, like where inflation is, to have a material impact on it. And I mean, headline inflation has been coming back down, but core has been at 5.5 all year. I mean, since 2023 started, it hasn't really budged at all. So, but I will say this, I do think that as long as the Fed stays the course, which is what Powell has said. I mean, I guess we should watch what the Fed does, not what they say, right?
Yeah.
But as long as they stay the course, I would say there's a higher risk of rapid disinflation in a recession than there is of hyperinflation, right? That's kind of where I am. If they pivot too soon, like they did in the 70s, then help us all, because then we might just get a decade of high inflation, right, where it becomes
Right.
entrenched. And I know a lot of people would prefer to get back to QE and all this stuff, but honestly, I think that would actually be very detrimental
I
for
agree.
people over the next five to 10 years. Because who you can't even go to the grocery store anymore without spending $300. You know,
No, that's the truth of it. I mean, it is insane there, and it used to only spend 300 at Costco, and now it's
yeah,
everywhere.
now it's everywhere.
Yeah, so I agree with you on that. I think that chances are the Fed doesn't raise rates, but I think that they will be hawkish because number one, I don't think they like the rally in the stock market. I mean, when you see these tech stocks getting these crazy valuations again, it's just whether it's money coming from crypto or it's just new money flowing in. There's a wealth effect that occurs, right? When you see your 401k up 20%, you start to say, oh, maybe I can buy that new car or maybe I can buy that new TV, and it creates a demand surge that if supply can't keep up with it causes prices to go up. So I think that would be something that to pay attention to. And then like you said, the question is, does the Fed actually stay the course? And for me, unfortunately, I'm doubtful. I think right now it's easy, right? You have low unemployment, you have good jobs numbers for the most part. So it's easy to say, yeah, we're going to stay the course. Show me an economy where you have 6% unemployment
Right.
and people are really struggling even more so, and then tell me that the Fed isn't going to come off the sidelines. And I agree with you. If they that would be the worst case. I know people want it, but one of the things that I always try to input into people is that cycles are natural courses, right? Bull markets, bear markets, business cycles, those are naturally occurring. And if you don't screw with them, I'm a big believer that it's much more like a rolling hill, right?
Mm.
It's when you have the Fed coming in like they've done, and we saw this in 2007 and pre going into 2008 in the financial crisis, is when you have the Fed artificially kind of doing things that create longer bull markets where the bull markets get crazier, the liquidity, the risk taking gets crazier. That's where you get the bigger, so it becomes much more like a Mount Everest, like up and then a collapse to the downside. And that's my big worry, is that because the Fed intervention was unparalleled since '09, it's what's the downside? I mean, again, if you look at trends, right, we can be above trend for a while, but at some point it needs to come back below trend. Well, we've been above trend. I mean, the chart of the S&P or the Nasdaq mirrors the 1999.com tech market, and we know what happened there. You didn't see new highs on the tech sector for 15 years, and that's the concern, is like, how does the business cycle react when things get tough, and can the Fed come out and save the day with inflation elevated?
What's your view? Because I mean, like, and you mentioned this earlier, is that all this stuff, all it does is create opportunities for those who stick around, right? Like, you don't need to look at this as some like crazy scenario that you can't handle. Just prepare for it, and if it happens, then you were prepared. If it doesn't happen, then so what? Like, you were managing your risk. So,
Right.
but my question for you though is, if you have, I mean, is there a certain time frame? I mean, first of all, we know there's been a lot more liquidity in the system than I think anyone could have possibly imagined, right? Like, just
Yeah.
so much liquidity that's just sloshing around. And the Fed doesn't care about markets if the S&P is at 4,300. Maybe it would care if it's at 3,300 or 3,100,
Right.
right? Then it starts to care. But in terms of time, when do you think we shift back in the other direction, right? Because we do ebb and flow from bear to bull, from bear to bull. Like, is it more so just like whenever something breaks and that's when we start to pay attention, or do you have, say, a timeline on how long this all could take to play out?
Yeah, it's a really good question. I mean, especially with Fed intervention, the business cycles have been screwed up. I mean, it's almost like, you take some drug to change your hormones and it changes everything around. Um, but in general, I would say that with the Fed on the sidelines and sucking liquidity out, we should see by later this year, at least I have it pinpointed in that by the fourth quarter, we should be in a recession. Now, whether or not the data will show that it's a recession yet, sometimes it's a lagging, we don't see until a month or two later. But one of the things I would keep a really close eye on is the jobless claims. The jobless claims last week came out at 266,000, which was the biggest jump in jobless claims in like the last multiple years. Now, it could be a fluke, right? We don't know. Maybe this coming Thursday, when we get jobless claims numbers, it's right back down to the low 200s, somewhere in that vicinity. But the question is, are we starting to turn the corner on the data? We did see some weaker, a few little, we know that some of the PMIs have been weak. We know that some of the other things have been weak. And so the question is really the only thing that's been holding up is the jobs data, right? The jobs market, the last non-farm payrolls was still very, very strong. But I think if that cracks, then the markets, at least the equity markets, really start to panic a little bit. Because again, the thought process has to be is that with inflation where it is, how does the Fed come out and save us at this point? And I think the Fed won't, unless, like you said, maybe at 3,300, maybe at 3,000 on the S&P. That's a long way away. There's a lot of pain between where we are now and where we are then. So,
Right. Well, the other thing too is that with the unemployment rate so low, it sort of raises the question, well, why is it so low? But history shows, I'm just going to show a chart. I guess you won't be able to see it, but the audience can.
that's okay.
We'll figure this out for next time. But initial claims and continued claims tend to lead the unemployment rate, by 6 months or more. And initial claims and continued claims bottomed, about 6 months ago. So I think there's reason to think that like there's just a lag. It doesn't mean that it's not going to happen. It just means that there's like a lag period where it gives people a false sense of security, right? Like just like with the altcoin market, right? Like everyone gets this false sense of security because they rally for 4 months, and then you wake up one morning and then half of them are putting in new lows,
Right.
The other thing too, Gareth, is I think a lot of people struggle with this, and I even struggle with this sometimes myself, because this really is my first, I feel like this is my first real full business cycle where things are just slowly playing out, kind of like the dot-com crash, that in bear markets, the market can go up more often than it goes down. It's just that when it goes down quickly, and then we just climb the wall of worry for months before going down again.
Yeah. And that's one of the reasons why I'm so skeptical of this stock market rally. And just to look at similarities out there, for instance, I'm going to try to bring up the NASDAQ chart here. But you're right about that, is that one of the things I always say is that the market takes the stairs up and the elevator down, which means when it falls, fear is a much more powerful emotion, and we see a much bigger drop in the markets much quicker. But then you're right, you get bear market. I mean, if you look at almost any business cycle in the stock market or in any market, the bounces, there's so many bounces that are huge. It's just once they're done, then we make new lows, much like the altcoin market just did, in fact. But let me just show my chart here, and so we can kind of take a look at this. And this is one of those things that kind of has me saying, all right, so right now this is the NASDAQ chart, and everyone is just becoming such a big bull. All right, the sentiment for the stock market is at the max greed level, or close to the max greed. But notice what we saw here. We saw sharp down, big bounce, sharp down, big bounce, sharp down, and then we've kind of trailed up here, and we're actually at about a 618 Fibonacci retrace on this chart. So we're right at a 618 Fibonacci retrace. Now, if we go to the weekly chart, and I'm just going to zoom all the way back to the dot-com era, and this is the weekly, so just bear with me, but look at that same sort of pattern. Sharp down, bounce, sharp down, and then we get this up move. And if you look at this was also approximately a 618 Fibonacci retrace right up here. And look at what happened. This was the big drop. And in fact, if we go to a measurement tool here, we can see that you actually had an initial drop from here to this low of around 41%. And then the bounce was, look at that, 42%, essentially the same sort of percentage bounce. So 41 down, 42 up. And then the rollover occurred. And interestingly enough, if we go back to our current cycle here, all right, if we go back here and we do that same measurement tool, we can see we had a 37% decline. And then same thing, if we look at the lows here, we're at 33%, right? So the thought process here is we could go up another few percentage points, but that doesn't, where we are in the NASDAQ doesn't mean that we're any different than where we were in the 2000 cycle. In fact, we're not even quite at the recent highs right now if you measure from top to bottom. So these are the types of things, like it's interesting to think, because bear markets have a way of changing your mentality to think you're in a bull market. Part of that is that people want to believe, right? We always want to believe like Bitcoin is going to win, altcoins are going to win, the market, like we want inherently, we're positive people, we want the markets to go up. But you also have to be realistic and look at the charts.
Yeah, I was actually on a stream this morning where I was looking at that same exact thing with the NASDAQ. And I'm like, well, I know the bounce has taken longer this time, right? Like yes. It has. And I'm just wondering, I'm like, is it taking longer because this time is different, which I don't tend to agree with? or is it taking longer just because there's so much more liquidity that has to get absorbed? And that's what I'm leaning towards, is that there's just more liquidity that has to get absorbed, because I can't help but think that the Fed will continue until something breaks, right? They're not, the problem, I guess, is that they're not going to pivot when the NASDAQ is up 40% and core inflation still at 5.5. Like, they're not going to pivot. So what would make them pivot? Something catastrophic happening. Does it happen next month, or does it happen 8 months from now? I don't know. I don't know. But there are, I mean, the index as a whole is getting extremely extended.
And I think you're, I mean, for me at least, I agree with you on that, is that I don't believe it's different. Everyone always says, oh, this time is different. And then inevitably it's usually, I mean, 9 out of 10, maybe 10 out of 10 times, it's not different. So then the question is it liquidity? And that's where I tend to land, which is what you just said, is that the liquidity in the system is actually increasing. And I actually want to show this tweet here from Sven Henrik, who's the Northman trader. I actually one of the few that I follow, including you, Ben, and a few others. But he said on August 10th, reserve balances with the Fed Bank were 3.348 trillion, and the S&P was at 4,325. Come around to June, their balance sheet which had come down, it then expanded again, and the S&P was within 2 points of that with the same balance sheet, right? So the idea being is that we saw this drawdown of liquidity in the market or in the system, and then the S&P fell, and then liquidity actually increased, whether you want to say because of the banking crisis or because of anything else, but liquidity increased and the S&P rallied back up. So the question is, again, is it just a matter of liquidity of why this rally has been longer than past?
Well, the other thing too is we're at the same price, but in real terms, people are down because of inflation, So even though the S&P is back to where it was, in real terms, it's not. But the other thing I think back to, and I'd like your opinion on this, because I am more familiar with sort of the mechanics of crypto than the equity market, and I want to sort of roll this idea by you. So, and it also relates to liquidity as well. Maybe you can pull up do you have the total Fed asset, assets by the Federal Reserve? It's on TradingView, like just total Fed or Fed total assets.
Let me try to find it. Total.
I think it's Fed total assets. I think should bring it up.
Is it public total federal debt, total public debt, or no? Not that one.
Maybe not. Let me see if I can find it on my end. I know I have it on my my website.
Okay.
Actually, I'll just type in total assets, and that's the first thing. Just total assets is the balance sheet. Yeah, it'll be the balance sheet. So when you look at, and if you could share it, I would do it on my end, but I just keep not being able.
No, I don't mind one bit. There we go.
So there's an interesting thing here, because we're not that far away from the March low, and the reason that it might be somewhat irrelevant, or it might be somewhat relevant, and I'm going to pull up a chart on my side and just show it to people so they can see some of the similarities here. And what I'm going to pull up is the market cap, the stablecoin market cap for crypto. Okay, so everything's about liquidity, right? Everything's about like what liquidity is in the system, and what's not there. But if you look at the stablecoin market cap, so what we're doing is we're going to add the stablecoin market of USDC, USDT. We're going to add DAI and BUSD. And if you do that, which I'm going to pull up right now, so let me overlay this on the screen. I have it, I believe, is it showing up? No, it's not showing up. No, but if you I'll show it once you're done sharing.
Okay, I can. There we go.
Yeah, so now I'm sharing it. If you look at this chart, the stablecoin market cap just took out its March low. So in March, during this major liquidity event, the stablecoin market cap went down to around 116 point something billion. We just took out that low, right? Like this past week. And this past week is when the reckoning occurred for the altcoin market, right? So this is what I'm wondering. Is there a similar thing playing out with the balance sheet, right? If the Fed's going to keep lowering the balance sheet, right? They're going to keep, and by the way, now that the TGA is being refilled, I imagine that's going to suck out more liquidity. Yeah. So I'm guessing, what happens if we take out the March low? Is that a negative impact for markets, or not? Just because, look what happened the last time we got down to those levels. Could that lead to something? And then the other thing that I want your opinion on is we saw Bitcoin rally in 2023, arguably, in my opinion, because altcoins were sort of bleeding back to Bitcoin, like the blue chip, right? Like a relative safety. Not to say that Bitcoin's always going to be safe if we go into a recession, but it's relative safety compared to the altcoin market. Do you think that there's a similar thing going on in like tech stocks? Because a lot of the reason the S&P is even up is because the mega caps have gone up a lot, right? Is there also a flight to safety like there as well, like with Apple and Microsoft and the AI play? Is that something that you see also happening?
Yeah, it is. It is actually absolutely. In fact, one of the things that's concerning to me is that tech stocks, these big cap tech, have become safety hedges, right? It's where people are flooding money. And interestingly enough, if you look at a chart of the Nasdaq or the S&P, it's really kind of had a pretty nice bounce. If you remove the top 10 market cap stocks, the S&P is like this,
Right.
right? And so what it tells you is that this move up in the market is being driven by these mega caps, which make up 30% of the S&P and 50% of the Nasdaq 100. But it's not a wide-ranging participation with the underlying stock. So that tells me again that it's big money, or not necessarily big money, but it's money that's just flooding into these as safety plays. And to me, if we get a recession, and I do honestly think that we are going to see a recession, and just a couple points to point out, this is the rate of change. So people will say, oh, well, go back X amount of years, interest rates were above where they are right now. But it's
Right.
it's not about that. It's rate of change. We went from 25 basis points to 5.25, basically, within what, a year and a half, something like that. That is a massive, massive rate rise. A shock to be honest, it's a shock to the system. And so then you throw in inflation, right? So then you have these type of costs on mortgages, on any sort of loan, car loans, whatever it is. And then you throw in inflation of 10+% that people have felt, especially with food and such. It's there's to me, there's a no-brainer scenario where the consumer at some point gives way. Yes, they saved up money from COVID, but at some point that runs out, and they're in deep trouble here. And I think that again is something. And just to point out something else in terms of the economy, I'm in a business here. This is a business building with lots of financial firms within this building. I was in the bathroom, and I overheard two people from a different firm talking, and they were saying how all of a sudden their bosses are on top of them for production. They said, oh, a year ago, everything was so good that it didn't matter if you weren't producing, like they were making so much money. He said, now it's like, if you're not producing, you're out, you're gone. And
Right.
that's a fundamental shift now with businesses where they're not making as much money. The economy's not as good. So again, it goes back to the jobs numbers. If we see that crack, I think things start to fall apart economically very quickly.
I've noticed a shift that occurred this month in my own, like it was legitimately this month that I've seen a huge shift in liquidity. I've also seen advertisers become more desperate, right? Like, because look, like money is drying up, and it's hard to think that it changes until we go back to looser monetary policy,
I
right?
agree.
Now, here's the thing, Garrett, that I think we have to think too about is that by the time everything is good, and like by the time the macro headwinds become tailwinds, the market will have already likely bottom. Like Bitcoin will likely bottom before that. So, is there something specific with the markets in general that you'd be looking to pull the trigger on? Because let's imagine there's a windfall, right? We know that the market tends to bottom before the unemployment rate peaks, right?
Right.
Because it's looking. Is there a technical level that you're looking at with things like the Nasdaq and the S&P 500, or is it more so just about the conditions that allow for a move down, and it's only once you can start to see the Fed wanting to pivot that you would then sort of try to front run that? Is there a technical target for this sort of stuff, or what do you think?
So I mean, there can be, but I think as a good investor, you have to be flexible, just like with altcoins and so forth. When panic hits, levels that you think are great can be just
Right.
washed out super quickly. But I will go here to the S&P chart, and if let's flip over to the weekly chart. So there's a couple that I want to keep an eye on. And again, I think that we've been so far be above trend that we are due for this kind of corrective move. So if you exclude that one crazy dip with COVID, you can see there's pivots going back to the 2009 low. So low So these lows here, it hit right here, it hit right here, and then you had the COVID kind of pierce, but then it got back above. So this would kind of be my first level. And interesting, you brought up 3,300 earlier. It happens to be right around 3,300, which is that longer term S&P trend line. If you want to talk like an Armageddon type scenario where panic really, really hits, let me get rid of this here, then I think the worst case scenario you could retrace to the previous highs from the .com and the S&P, which mirrored a perfect double top from '07. The only reason why I think and again, this may not even be this cycle, but I do think eventually this gets retested, is that there's a tendency when a level is broken to retest that level. So you break above a level and then you come back. It's almost like, think about you're leaving for college or the university and you come back for Thanksgiving dinner to your parents' house. You come back to spend some time with them, right? Before you're really off on your own. And I think that's the one thing here, is that because of the Fed intervention with liquidity, we never had that retrace to what I call the scene of the crime. And so at some point, if stuff hits the fan, if shit hits the fan, then that would be your kind of worst case scenario. But right now, that 3,300-ish, 3,000 level is probably your big target, where I would expect a huge bounce off that. Very tradable, just maybe not long-term investing wise.
One thing interesting about this chart is that what is the pre-pandemic high? Was it 34?
Yeah, right here.
3,400. So what's really interesting to me is can you flip this over to after you draw the trend line across, and then look at Bitcoin, and it also came very, very close to its 2019 high, right? Like it came to within what, like $1,500 or something of the 2019 high.
Yes. Yeah. Wow. Good point.
But Gareth, this is why I am so bearish on the altcoin market, and I've said this for 18 months, right? Pull up total three, which is it's everything besides Bitcoin and Ethereum. Yeah. Okay. Look where the 2019 high is.
Oh my gosh.
That is why. So, and by the way, there's two things related to this that I think are worth mentioning. Number one is that the stablecoin market does include about 116 billion worth of stablecoins. And so we could add 100 billion to that and say a more realistic target is 200 billion as opposed to 100 billion, because again, it does include stablecoins. And back in 2019, there were basically no stablecoins. The counterpoint to that is what happens if the SEC goes after stablecoins. Then maybe maybe it can go down to 100 billion. But I think for me, like if the altcoin market retraces to that a $200 billion level, which would be, by the way, like if you take total three and you subtract out the stablecoin market caps, that essentially would be the 2019 high. It would be about a 200 billion. I mean, if you fix it, it would be closer to 100 billion if you remove stablecoins. But that is one of the reasons that I can't help but think that the altcoin market still needs to get wrecked, because if Bitcoin can go to its 2019 high, or even close to it, and if the S&P can go to it, then what business does the altcoin market have doing in places where it currently is, right? Yeah. And I know I don't like it when people tell me to pull up charts, but I'll try to figure this out for the next time. If you could just quickly pull out the Russell, Russell 2000 RTY, that one works too. That one, either one.
Okay, I'll do the IWM. That's what.
Yeah, okay. That's fine too. Yeah, but look at the look at the 2018 drop and then the 2020 drop. The 2020 drop was so much lower than the 2018 drop, right?
Yeah.
Like the March 2020 low is what I'm talking about. Like the March 2020 low, it was what, at 90 or something? Yeah, there.
Right there.
97. And then look at the 2018 low.
Yeah, right there. Right, well, 2016 low, but you're talking about 2018 right
yeah,
here.
So the initial impulse down in 2018 for the Russell was not that bad compared to everything else. But it was after the uninversion of the yield curve that it went much lower. Yep. Whereas the S&P during that same time was basically, I don't quote me on it, but I think it was like what, a double bottom. It wasn't a much lower low from 2018 to 2020. The S&P was essentially at the same level. I'm going to pull it up on my screen just so I can double check. Yeah, so like the S&P was what, 20, yeah, like it wasn't even that much lower of a low from 2018 to 2020.
Yeah, you're right.
It was only slightly lower. So what happened once we got the uninversion of the yield curve, right? When we got a recession, it was all the micro caps that got wrecked, right? That's why I really struggle to get on board with this idea of DCAing altcoins, right? Because that's the easy people, that's the easy strategy that everyone's going to tell you, right? They're only ever going to say buy the dip. But what happens when the altcoin goes from being 80% down to being 90% down to being 95% down? And it's a tough game to be in. And the only reason I know this is because I've been wrecked in the altcoin market so many times myself. I don't think we say these things to just be like, bearish for the sake of being bearish. It's more like, look, guys,
dude, we've been burned.
We've learned these lessons the hard way. Yeah. It doesn't mean that it has to play out, but there's a chance that it does, and you owe it to yourself to prepare for it in case it does.
I 100% agree, and I think that's a really good area to kind of conclude, if you're okay with it, conclude this session, because we're going to bring this no shill zone to people every freaking week and give them some major insights. And you brought some amazing charts even to my attention, and I do appreciate that. And I would just say again, I think the parallel you're drawing, and I could be mistaken by this, but you're talking about how the Russell is the equivalent of the altcoins, and look at those kind of dips and how much riskier. So when you're dealing with the Russell 2000, you're dealing with small caps, the kind of the not as good quality versus the S&P and the NASDAQ, and the tendency for it to go much lower than the S&P or the NASDAQ.
Yeah, it seems like in every market there's like the blue chips, and then there's like the sort of the micro caps, like it's like the altcoins, right? It's kind of like how people back in the .com crash, like, I think a lot of people look today and they call the altcoin market, the term that they call the altcoin market, right? They said the same thing about the .com companies back in 2000, right? It's just it's the same thing. But hey, I think this was a great session to start with.
I do.
If you guys like this, make sure you subscribe both to me and Gareth. We both have YouTube channels. And we will
follow Ben. Anyone that follows me on Twitter, follow Ben, and vice versa. And we're going to work together more and more to make sure that there's sane minds within crypto, within the markets, that are going to give you the facts, the charts, all that stuff that comes with having it as the no shill zone. So yeah, man, I mean, this has been an unbelievable pleasure, and I'm so excited to go forward with you and do this every Monday at 11, guys. Mark your calendars, set the reminders.
Right, every Monday at 11, data-backed insights. No shilling.
Yeah.
No shilling. All right, guys. Thank you guys for tuning in.